So a deceleration quarter for Netflix?
Yeah, that's what it's looking like. I mean, we saw the stock go down way much into Q2 because they forecasted there would be a lot of slow growth. And the reason being, Kelly, is that people are no longer stuck at home. Lockdowns are starting to be lifted. There's also some increased competition. We know new streaming services like Peacock have launched. So consumers have options, and they're no longer just stuck inside the TV.
Young, what are your thoughts on the quarter and the company's share price performance this year? What's priced in?
You know, I think the COVID-19 stay-at-home scenario is what's priced in at this point. I think the major concern is what happens when these stay-at-home rules ease. I mean, we've run a number of surveys so far that shows that consumers are very adamant about staying with Netflix even after these stay-at-home rules ease. So I'm pretty comfortable with where the numbers are right now, and I'm looking forward to seeing what happens next.
Yeah, Young, it's kind of sticking with that theme. One of the big debates in the market is about whether to stick with pandemic winners or not, because they've, you could argue, pulled forward a lot of demand, or on the other hand, you could say, no, this is kind of the new normal for the way that people consume content. For Netflix, throw on top of that a possible price hike. Do you want to see them raise prices, or do you think they would risk losing too many subs over that?
You know, I expect to see some kind of price hike over the next 6 to 12 months, and that's assuming that they do grandfather in their current subscribers as well. I mean, I do think it's a fair concern about whether a price hike would, dissuade other people from joining the service. But what we're seeing right now, although I think part of it is a pull forward, I think we're also seeing an acceleration of trends that were happening even before COVID. People were already cutting the cord and switching from their traditional cable TV to streaming services. So I don't see this as terribly unusual and a pull forward solely, but an acceleration as well.
Yeah. What's your price target, Young, on the shares?
I'm currently at 534, and that's 60 times my 21 EPS estimate of about 890. However, I think it's important to note that the 5-year historical multiple on next 12 months is around 70 times, and the 10-year is around 120. So I think I'm still being pretty conservative at 60x.
Wow. It's wild that it can trade that way for as long as it can. And by the way, the shares are at 533, so just right below your target. Sarah, the kind of larger question here for Netflix as well is, how do they continue to fare amid so much competition? You know, this is not 5 or 10 years ago. There's nothing unique anymore about their offerings except for the literal unique original series and that sort of thing they have. So how are they going to navigate this increasingly crowded landscape?
Well, it's really crowded in the United States and in Canada. So where they're going to look to growth is overseas in international markets. And they've been pretty clear about that's what their ambitions are. But the other thing to think about with competition, Kelly, is that they don't just see other streaming services as competition. Reed Hastings has said Fortnite, TikTok, other apps where you spend your time, that is becoming their new big competitor here in the United States. And so in order to innovate, they're not only going to have to optimize their programming, but they're going to have to make sure that they continue to be a mobile success, something that people can watch when things do open up in lockdowns, that people can watch on the road, on their iPads, etc.
Shepard Smith here. Thanks for watching CNBC on YouTube.